Hi there, you're watching the weekly wrap on your trades on ET Now. This is Priyanka Pal along with me. Sneh, is it wrong to say that market got a red rose and it's been getting from last 8
not.
days?
You know, this is not how we wanted to spend Valentine's Day, especially
It's
with the
all
market.
red, and it's all tariff, and tariff. That's what the news and which is gaining the maximum of the attention. Is it the India at a high reciprocal tariff risk? What is spooking fear amongst traders? We'll have to watch it out. But actually, if you compare it with the kind of tariffs, the kind of average weighted tariffs, what an Asian country or a developed Asian country has, then India, Vietnam, China, experts are to be believed, they're at a higher risk. And that's what is spooking fear amongst the market. But let's look at the weekly move. This whole week, 8-month low we've come at for Nifty, down 2% for this whole week. 8th straight day of closing in red on indices. Mid-cap and small cap have also hit 8-month low this week only. And in fact, small cap is almost in bear territory. In fact, it is in bear territory. If you look at it's down more than 22% from its peak. Mid-cap is down nearly 19% from its peak. We are in a bear territory for small and medium sector. But at the same time, is the valuation still frothy? Are we trading at least below the emerging markets average? But where is this the right time to find the valuation? Is it the right time to find value comfort in the market, or time to wait for some more time till the dust settles? We'll have to wait and watch. But I guess, Snehi, what a bad week we have to say. This whole week, Nifty reality has hit its 10-month low. I mean, we've made a lot of records, but not on the good front.
I'm not even surprised at all, because we have tanked so much on the market right on, like you rightly pointed out, we're in the bear territory now when it comes to the small cap space. So that is something to watch out for. But a couple of big events that we had over the course of the week. Started the week with the Aero show coming in Bengaluru. Couple of announcements coming in from that front. You had the PM Modi-Trump meeting coming in. The entire mega issue has happened, and well, we can only hope that it turns out to be mega for India going ahead, because at least if you take a look at what the oil and gas index has done today, that was lower by 7% on an intraday basis. The entire index, mind you, is on the back of the word coming in from Modi that we will be charging lesser tariffs to US crude, despite everything that's been happening when it comes to tariff wars that Trump has imposed all over the country. And of course, his blanket ban announcement, another major thrust coming in on steel and aluminum that he has imposed all over the world. So that is also something that was not very welcome by the markets. You had CPI data coming in from the US. That rose a little bit. India's inflation cooled off a little bit. WPI data also looking very promising on the food inflation front. So macroeconomic indicators were looking healthy for us over the course of the week. You also had AMFI numbers coming out, the SIP data coming out, and continues to be above 26,000 for the second straight month, even amid a volatile market like this. So that is also something that was looking promising. So these were a couple of big events over the course of the week that have happened. But let's keep the discussion going about what this week was like, and even more important, what we can expect going ahead into next week. We have Ashi Anand, founder and CEO at INE Capital, joining us, along with Lakshmikant Shukla, the technical analyst of institutional research at Yes Securities India. First of all, Lakshmikant, coming to you. Good afternoon to both of you. First of all, coming to you, Lakshmikant, give us a sense of what we can expect heading into next week in terms of the levels that we can see on Nifty and Nifty Bank, because on an intraday basis it's happened that we have hit a low, then we've seen some sort of recovery. The second we get happy and we start talking about it on air, we've seen another reversal of the reversal coming in. So tell us what we can expect heading into next week.
Good afternoon, Snehi. First of all, thank you for calling me on your show. So rightly pointed by you that the market sentiment, what we have observed over the past few sessions, has been a mixed bag. While there were brief moments of positivity, but the overall trend has shifted on the lower side. Even the whatever rally we have got, that being met with sell-off. Even we look at the instance of last 2 days, we tested the January low, which saw some buying interest. However, this subsequent rise we witnessed, these subsequent rise quickly dissipated and indicating a lack of sustained momentum. But on the lower side, the levels of 22,800 could act as the support areas for the Nifty. And even on the today's session, we have seen sharp recovery, which is coming around the around 100 to 130 point. So we are expecting that market will going to retain these levels, and we could expect some more pullback move. So if Nifty able to hold the levels of 22,780 to 22,800, then it is going to form triple bottom pattern on the daily chart. So which is suggesting a trend reversal. And we can get the confirmation of this triple bottom if it surpasses the levels of 23,400 levels, which could potentially push Nifty toward the levels of 23,800. But on the flip side, if Nifty breaks the levels of 22,780, that would be the crucial support. Then we could see further correction in our index toward the levels of 22,500. So I think that this is the level based, we should follow level based approach while trading in the index.
Okay. So we need to watch out the levels to take next step, but then rightly pointed Lakshmikant, because we've seen a pullback from 20,800 yesterday also, but it did not sustain. And the reasons are beyond technicals. The reasons are more of fundamental, more of macro reasons. So I'll bring in Ashi Anand to discuss the same on that matter. Ashi, the kind of data when we were collating, what we saw in the month of January, if you look at FPI selling, that was entirely in large cap space. In fact, there was small buying which happened in the SMID space if you look at the data from January month. But the kind of move we've seen in the February month, there's been just 10, 12 sessions so far, and small cap and mid cap, they are almost in bear territory. Is it the right time to do bottom fishing, or what would be your advice to the viewers at this point in time for small and mid cap space?
Sure. Firstly, thank you so much for having me on the show. I think it's important to just look at this from a slightly larger, slightly longer term context. If you just look at the move that you've seen in the overall markets, if you've seen the move that you've seen specifically in small and mid caps, the small cap index is up 5 times from the COVID low, is up almost 3.5 times from before, just before the COVID fall. Now, if you're looking at the move in the kind of correction that we've seen in small caps, a 20% correction from the high, in the context of the fact that it's moved up almost 3.5 times over the last 3-4 years and 5 times from the COVID bottom, that is still relatively a fairly small correction in the context of the move. It is also kind of important to understand, and I think not just me, but multiple market participants have all been calling out high levels of valuations in small caps, froth in certain areas of the market, especially in certain sectors which are relatively hotter. Now, even after this 20% kind of fall that you've seen in small caps, we don't yet see very attractive valuations. If at all, you'd still kind of call valuation in this space fairly expensive. The outperformance to large caps over a 3-4 year perspective is still fairly strong. In the context of the overall headwinds that the markets are currently seeing, you are seeing slowing economic growth, slowing corporate earnings, a clear kind of geopolitical risk, tariffs that the US is imposing, a certain weakness in the rupee, and also an interest rate cycle that is not falling as quickly as one was earlier expecting. Kind of expecting this kind of correction to possibly continue a bit more. I don't think it's not really unexpected. One could kind of see further downsides from this current level, but again, looking at it from a slightly longer term perspective, this actually presents a very attractive buying opportunity, right? So rather than investors kind of being concerned about the potential downside risk in the near term, we really look at this as a very attractive opportunity for investors to actually be able to buy into kind of companies, sectors, and funds that at significantly lower value than they were available a few months back.
Okay, Ashi, thanks for that view coming in. Also, Ashi, once again coming back to you, help us understand the kind of impact that we're expecting to see from this entire narrative that's going around Donald Trump and his tariffs coming in. Now, if you take a look at some of the companies for us that are US facing or have a major chunk of exposure to the US, the likes of your IT names or the likes Infosys, TCS, or your pharma names, your Dr. Reddy, Sun Pharma, Cipla, give us a sense of what kind of moves we can expect going ahead on these stocks, and what kind of internally for these companies, how is this news flow expected to pan out for them and these overall sectors as well, your IT and pharma?
So it's very important to kind of just look at the way Trump operates, right? And this is his second presidency. We have seen him do something similar in his first presidency. He typically comes out and actually, in order to get people onto the negotiating table, he makes a lot of noise about fairly aggressive measures. And he actually uses that to get people onto the negotiating table and to basically call out favorable kind of deals. Um, when you are looking at kind of tariffs, it is important to understand that we need to look at tariffs from a relative perspective. So, if you're looking at the kind of the steel tariffs that were implemented, or at least in terms of talks of being implemented, right? Most of what Trump is talking right now are all still early measures. As kind of various discussions progress, you'd actually see what actually comes out. But the biggest actually negative would be for countries like Canada and Mexico. And on a relative basis, it may actually be relatively better for India. Again, if you're looking at kind of key export industries, you really have to understand who the major kind of competing countries are in that particular space and how US tariffs would pan out in India relative to those markets. Net net, if there is a tariff increase, but if our competing countries actually have an even higher tariff increase, it could technically work out actually net net positive for India. So it's still probably too early to say. You don't really know what the eventual tariffs are likely to be. What will happen from a stock perspective is markets will actually increase in uncertainty discount because you don't like not having clarity on how things are going to move going forward. But we will actually have to wait and see what specific tariffs come out in which specific industries and accordingly take calls.
We'll have to wait and watch. However, there is this view that many of the Asian countries which have higher tariffs are at higher risk, and India is one of them. A lot of sectors will get exposed to higher tariffs in such case. Then, I will come to you, Lakshmikant, since we spoke about a key crucial level would be 22,800. But then, the kind of F&O data, what is reflecting? FIs have been continuously on a selling spree. More than 20,000 crores sold in the month of February so far, and there's no stopping this. Again, a big quantum of FI selling is coming every day now from last 2-3 days. Now, where would you find a key crucial support? Because the data doesn't reflect you any put buying or maybe put writing at the lower levels.
So as looking at the structure in the index, as I said that if it able to close above the levels of 22,800, even on Monday basis, if it able to defend these levels of 22,780 to 22,800, then after we could see some formation of triple bottom. So that could be the level from where we could see some sort of pullback move. And if it able to break this level, then after we could see some more deeper correction in Nifty toward the levels of 22,500. And as you're talking about the FI, so FI have been selling from last 2 months heavily in both the indices. So I think that that would be continue in the upcoming sessions also. Even if we look at the FI long short ratio, it is trending lower and it is still trading near the mark of 15.18 to 15.5%. So I don't think so that they will stop these selling and they will continue. But as per the technical parlance, and if we talk about the on a structural basis, that according to us that 22,780 would be the crucial level for the Nifty. And on the flip side, if it reaches this, then we could see some more correction in the Nifty toward the levels of 22,500.
Key levels to watch out for and important levels. Lakshmikant, coming back to you, share with us your picks. Was looking good on the technicals going ahead, was looking good on the charts, and what would be some trades that you would recommend for our viewers heading into next week?
So as index is hovering near a crucial support level, so I have one buy and one short recommendation. First, I would like to talk about long recommendation. So I have seen that Nifty Financial Services, where we have seen some sort of positive momentum in the upcoming sessions. So Chola Finance is one of the stock where we could see buying momentum in the upcoming sessions. 2 days back, it has formed bullish engulfing pattern on the daily chart, and yesterday we have seen follow through buying momentum. but today's correction, we have seen that Chola Finance could retest its breakout, which occurred yesterday. So I think that current level would be the best level from where we could get a good risk and reward ratio. So one can buy Chola Finance from the current levels and could expect the upside move toward our target of 1,435 with the stop loss of 1,340. And a second stock which I would like to recommend for the sell side, that is United Sprit Limited. This stock has given a horizontal line breakdown, and from last 4 to 5 days, this stock has been trending lower with the formation of lower tops and lower bottom, and currently it is trading near its below its all key moving averages. So I think weakness could persist in this stock. Expected target is coming around the levels of 1,285, and one has to keep the stop loss of 1,405 while keeping taking short position in United Sprit.
Okay, all right. So one short trade and one long trade. That's what Lakshmikant is recommending at this point in time. Actually, because the Trump policies and the tariff war, that actually took the complete center stage, that we've not spoken much about the corporate earnings, which has taken a backseat. But then if you look at this quarter, also looks like commodities were again a drag. If you noticed last quarter also, industrials, metals, cement, oil and gas, they have been the major dragger. If you look at the complete profit pool, this time also was no different. Any key observation what you saw from this quarter results earnings so far?
So if you just look at the corporate earnings, right, and we are at the fag end of the season, it is clearly a bit muted. If you just pretty much across sectors, there is a certain level of weakness. If you're looking at kind of banking, growth has come off a bit. It's still kind of decent, but it's come off a bit. But there are asset quality issues in microfinance and in the unsecured space, and there's also some level of NIM pressure. However, we do see a lot of value in this particular space, and certain of the banks with a higher level of exposure here have corrected quite significantly and can present a very interesting buying opportunity once the kind of dust settles. You've seen kind of a bit of a mixed trends in consumer. It is actually a bit heartening to see certain kind of discretionary companies. If you look at a Nykaa, if you see a Titan, certain kind of consumer companies have actually gone against the trend and seen some kind of an overall rebound in growth. But consumer trends are clearly quite mixed, because on the other end, FMCG, a lot of paint companies, etc., continue to disappoint. IT has shown some signs of a recovery, but this recovery is still a bit muted. And if you're looking at kind of various parts of the capital goods, and so if you're looking at capital goods has been a bit mixed. There have been certain companies that have outperformed, certain other companies which have disappointed. And kind of one other key sector, which is kind of real estate, which has been under a lot of pressure. You've actually seen clearly quite mixed results. At one end of the spectrum, you've had DLF, which has come out with extremely strong pre-sales numbers. But there are other kind of companies which have disappointed. Especially, I think there are certain approval delays in Bangalore, which is kind of leading to companies like Prestige and Shobha quite missing in terms of their overall pre-sales trends. So overall results are a bit muted. We are kind of expecting a recovery as we go over into the next couple of quarters. But this is honestly something we are focusing, which I think is something very important for the markets to bounce back. You do need greater visibility of growth coming back in order for this kind of current muted kind of trend to basically change and for us to move back into the more bullish phase.
Point taken, Ashi. Thanks so much for that view coming in. But both of you, Lakshmikant and Ashi, thank you so much for joining us. It's a pleasure speaking to both of you on ET Now today. On that note, we'll let you go because viewers, we're completely timed out on this weekly edition of Your Trades. Thanks so much for watching.